To have Abiodun Kerikwe, the MD, Afrinvest Consulting. Great to have you on the show, sir. Good afternoon.
Good afternoon, Laddie. Thanks for having me here.
Fantastic. So we've hit another high for our foreign reserves. How bullish is this news for companies listed on the NGX?
Yes, indeed. External reserve is up in excess of 8%, or roughly just about 8%, which is very strong news, particularly if you look at it in the context of where we're coming from as an economy. So really, this is quite positive and encouraging for the market and for companies generally. If you dimension it from three particular angles, first of all, the build-up in reserve drives what we call macroeconomic confidence. Two, it drives liquidity, and then it also shapes up risk perception about the Nigerian economy and the business environment generally. So if you look at it from a macro stability or macroeconomic stability or confidence perspective, the build-up in external reserve clearly influences exchange rates, which means stronger reserve would help the Nigerian economy defend the currency better. And a stable currency would mean reduced imported inflation and exchange rate risk. If you look at the headline inflation numbers, even that we just saw recently from the NBS, that number continued to track downward. Then looking at it from a lower country risk premium perspective, investors would then begin to look at the Nigerian economy as a much more resilient economy, which of course would lead or translate to increased foreign. Look at it from a foreign direct investment perspective or foreign portfolio investment. And more importantly, the policy space, it creates greater policy space, both from the fiscal side and from the monetary side. So the government, central bank can now better manage shocks, either from commodity price swings or capital flight. And then it then provides a more predictable business environment for businesses. So that build-up in reserve that we're seeing provides economic stability and investor confidence. Then from the company perspective, which are the listed companies, how does this translate into bullishness? I mean, using your word, for these companies and create a bullish outlook for the Nigerian market as a case where. So stronger reserves will then translate into stronger macro fundamentals, and of course, which has several benefits for firms. Looking at it from a lower input cost for import-dependent companies, so you have companies that are import-dependent. And if you look at the performance of companies in 2023, 2024, they suffer quite significantly from this. What we're seeing in 2025 is a massive recovery where companies are moving from a loss position to profit provision, even on an after-tax basis. So with the build-up in reserve, we expect to see exchange rate stability, more exchange rate stability, and that would translate into lower cost of imported raw materials for these businesses,
right,
and also lower FX losses on foreign denominated debt. More importantly is the impact it will have on interest rates, which although can be indirect, but it provides a bit more headroom for monetary policy authority to be more flexible around interest rates, although there are other variables to be put into consideration, which will translate into cheaper borrowing and better profitability for businesses. And lastly, if you think about it from the consumption or investor confidence part of it, there is that general improvement in confidence, which will drive consumption, drive capital expenditure, and then mix earnings.
All right, Abiodun. So, definitely you've mentioned, stability. Definitely we enjoyed stability for a while now, with the foreign exchange, our foreign exchange reserves also, rising. But, some of us still expect to see, strengthening, for the naira. At what level would you say our foreign exchange reserves needs to get to to take us to sub 1,000 naira to the dollar? Are we talking $60 billion, $70 billion? Is that what we need to get to get a stronger naira, sub 1,000?
Yeah, good question. So if you look at the external reserve trajectory for the Nigerian economy over the past 10 years, if memory serves me right, if you think about what's the highest level the external reserve has gotten to, and what's the corresponding naira dollar rate at that level, that sort of can give a bit of a guidance. But a lot has changed between then and now, right? So if we see external reserve going north of, I'll put it roughly $60 billion level, that clearly gives the CBN a new level of firepower, right, to better defend the Nigerian currency, even though we are operating a much more transparent currency management regime in this dispensation. If you agree with me, that then gives the CBN more firepower to provide the needed stability, absorb as much shock that we might see either from commodity prices or from the external environment to better defend the naira. So rough estimates are suggesting that we could see the naira appreciate to levels around the 1,100 level to the 1,200 level if we see reserve build up at a much more faster or aggressive pace. And this also have positive impact both for government, both for debt, how we are ranked in terms of debt servicing or debt indicators, debt ratios, how we're perceived along those metrics.
All right, definitely we'll keep tracking reserves at this point and see how much it swells and gets the naira stronger. Thank you so much. It was great having you for this conversation. Abiodun Kerikwe is the MD, AfriInvest Consulting. Thank you so much for joining us today.
Thank you, Ladi, for having me.